We continue to follow some of the stock stories, the movers here on Wall Street. Diane King Hall, host of Morning Movers, is with me, and we're first taking a look at advanced auto parts. Folks are keeping their cars longer. They need parts, soaring, right?
Yes, more than 40% right now. So it takes it positive for the year for advanced auto parts. And they did better than expected in the trailing quarter, much better than expected. The bleeding on their balance sheet really coming in less than expected. Adjusted loss it reported a loss of 22 cents a share on an adjusted basis, but that was much better than what the street was looking for. The street was expecting a loss of 82 cents a share. Revenue came in at $2.58 billion. Although that's down on a year-over-year basis, that's also better than expected. The street was looking for $2.5 billion. So they cleared both of those hurdles there. Here's the other big hurdle they cleared. They stood by their full-year guidance. That essentially signals confidence in their turnaround plan despite economic headwinds. Of course, they acknowledge the impact of tariffs. That's one of the concerns that's hanging around advanced auto parts because we know that affects that sector as well. The CEO called it a, quote, highly dynamic economic environment, but essentially indicated that the company's taking mitigation steps and is focused on a strategic turnaround. So you can see the street really likes their results. Their full-year forecast, they're projecting adjusted EPS of between $1.50 to $2.50 and sales between $8.4 to $8.6 billion. So again, just reiterating and boosting investor confidence. And, you know, of course, you keep in mind this comes against this overall, you just talked about where the broader market is, flat today. So you're seeing a big surge there, Nicole.
It's amazing because we're seeing some big, and at the end of this, Diane has three names, and she's going to have a name that's down 40%.
Yeah.
I mean, the moves this morning are huge. Urban Outfitters up 20%, Snowflake's 10%. You just mentioned advanced auto parts up over 40%. It just shows you that some of these earnings stories or particular stories are more than even folks would anticipate. And the fact that they gave their guidance, I think you made a great point there.
Yeah, and especially given that it's in the auto parts sector and they do have tariff exposure risk here, but it shows that, you talked about consumers keeping their cars longer, so that bodes well for an advanced auto parts. And, look, I have an older vehicle myself where I'm approaching 100,000 miles, so I would need to go to a company like that to, say, replace some parts. So, look, D.A. Davidson made this point in terms of some of the analyst commentary that we're seeing. This morning's print is a step in the right direction with respect to their turnaround progress and should help the stock rebound at least partially. Certainly helped it rebound more than partially in terms of the year-to-date performance, Nicole. But they did point out Advanced Auto Parts has been their worst performing big box name in their space, even worse than Target, because before today, they were performing worse.
That's right. And then now we have a downgrade. We're watching the solar group getting hit today. Multiple stories going on there. Let's hear about this one.
Big hit. Sun is definitely not shining when it comes to the solar stocks. We're looking at Sunrun in particular. BMO downgrading Sunrun to underperform. They're slashing their price target from $9 to $4 a share. Here's overall the catalyst when we're looking at the pressure across the group, whether we're talking about Sunrun, SolarEdge, or Enphase Energy, all of them are under pressure. This is because of that tax and spending bill that is passing, making its way through Congress. It phases out those clean energy tax credits implemented under the Biden administration's Inflation Reduction Act. So BMO calling out that legislative risk, specifically potential changes in the One Big Beautiful Bill Act. That's the language they use, which is, of course, what the president is calling it. Sunrun would lose access to the solar investment tax credit that's under Section 48E. Don't want to get too far in the weeds, but with regard to those residential solar leases after 2025, if these proposed changes go through. And again, they've already made it through one of the chambers of Congress. So they would impact Sunrun's core business model. It's still, of course, that bill, of course, faces debate in the Senate, but the expectation is that it would get through, as you know, Nicole. And so there's not a lot of political support when it comes to the residential solar credits. So legislative uncertainty is one of the reasons that BMO flagging Sunrun. They expect the financial pressure, the strain to get worse for Sunrun because they have a lot of debt already. And so the government tax credits help offset that debt. So, it really puts pressure on their business model and whether they can continue to be profitable and just have enough money to essentially cover their bills.
All right.
Yeah, Sunrun, the worst performer in the group here, down more than 40%, as you mentioned.
Yeah, and you mentioned the others. Enphase 20%, Solar Edge 25%.
Absolutely.
First Solar is doing a little better, down 5.5%. Then there's Zoom Communication, used to be Zoom Video, Zoom. It's down 3.7%. Wasn't terrible, actually.
It wasn't. It wasn't. And initially, in the pre-market, it was pretty range-bound. In terms of how they did, they actually did do better than expected in the most recent quarter. Adjusted EPS came in at $1.43. That's better than what the street was looking for, $1.31. So definitely clear bottom line beat. Revenue came in at $1.17 billion. That's up nearly 3% year over year. That's a slim beat there. I mean, the street was looking for $1.16 billion. So again, you know, they are clearing these levels. They're still leaning into this AI-powered growth story here. They talked about just the hybrid workforce and the tailwinds there, demand for their AI-driven features. They'd rolled out these expanded AI companion tools in March. Those are features like those meeting summaries, video clip generation. Different platforms are utilizing different features like that, so Zoom has been leading into that. And so they've got this embedded across their platform now, and they really have to lean into that given where the path is going with regard to AI. They did raise their fiscal 2026 revenue forecast to between 4.8 to 4.81 billion. That's actually just above consensus. So again, as you mentioned, not bad. They lifted their adjusted profit guidance. They lifted that to 556 to 559 a share. Also better than what the street's looking for. It's just like, it seems like in terms of how Zoom is being viewed now, it's not the same as it was, right? You remember it was a pandemic darling. That is not the case now when it comes to Zoom.
And look, I mean, they're still very competitive. Microsoft bundles Teams, which a lot of people use. Skype is gone. That's at least one little thing that they can probably have as on the positive side. A final thought here?
Yeah, look, and I mean, the way the sell side is viewing this is that they're actually pretty constructive. Like, again, their takeaway from these earnings is that they're good. So you're seeing price target hikes this morning. Needham is also now a buy on it. Their new price target on Zoom is $100 a share. Again, once upon a time, Zoom traded far above that. But Wells Fargo is raising their price target to $80 a share, so they're pretty neutral on it. They are equal weight on it. Morgan Stanley raising their price target to $85 a share, so they see some upside from here, but they are neutral on it. They're equal weight on that. Rosenblatt reiterating a buy rating on Zoom. They've got that same price target that Needham raised theirs to. They raised theirs to $100 a share. So the sell side certainly sees some room, even for those who are neutral on Zoom.
All right, Diane King Hall, good look there. Advanced Auto Parts. We looked at Sunrun, the solar names, and Zoom. Thank you.
You got it.